We've all been told to save money in the bank. But here's the thing, most wealthy people don't follow that advice. Ever wondered why? In this video, we'll uncover the secrets of why the rich rarely park their money in a bank account and what they do instead to build and protect their wealth. Let's start with a fundamental truth. Banks are designed to make money, but not necessarily for you. The rich understand this, and that's why they avoid letting their cash just sit in a savings account. Instead, they put their money to work. Here's how and why. First off, let's talk about interest rates. Most savings accounts offer an interest rate that's less than 1%. Compare that to the average inflation rate, which is usually around 2 to 3% per year. What does this mean? Your money is actually losing value over time when it sits in the bank. For the rich, preserving wealth is as important as growing it. They know that parking money in a bank is like putting it in a slow-motion shredder, gradually eroding its purchasing power. But there's more to the story. The rich understand the concept of opportunity cost. Every dollar sitting idle in a bank is a dollar that could be generating returns elsewhere. Whether it's in the stock market, real estate, or a business venture, the wealthy are always looking for ways to make their money work harder. By investing instead of saving, they not only keep up with inflation but also create opportunities for exponential growth. Another key reason the rich don't hoard money in banks is because they understand leverage. Instead of saving, they borrow at low interest rates to invest in high-return assets. It's a calculated risk that allows them to grow their wealth faster than they could by simply saving. For instance, rather than paying cash for a property, they might take out a mortgage at 3 to 4% interest and use the remaining capital to invest elsewhere at a higher return rate. The gains they make from their investments far outstrip the cost of the loan. Liquidity is another concept the rich prioritize. While they don't keep large sums in a savings account, they do ensure they have access to cash when needed. How? By maintaining diversified, liquid assets. This could be in the form of stocks, short-term bonds, or other easily convertible investments. These assets can be quickly converted to cash if an opportunity or emergency arises, giving them the flexibility that a traditional savings account would, but with the added benefit of growth potential. Now, let's talk about taxes. Money in a bank account is fully exposed to taxes on the interest it earns, which is already minimal. On the other hand, investments offer numerous tax advantages, such as capital gains tax, which is typically lower than income tax. Plus, certain investments can be structured to defer taxes or even reduce them. The wealthy use these strategies to keep more of their earnings and reinvest them, further compounding their wealth. There's also a psychological element at play. For the rich, wealth isn't about just having money, it's about creating opportunities and ensuring long-term security. They view money as a tool, not a resource to be stockpiled. This mindset shift is critical in understanding why they avoid letting money sit idly in a bank. Their focus is on creating systems and strategies that allow their wealth to grow and work for them, even while they sleep. So, what can you do? Start by rethinking how you view savings. Consider allocating a portion of your funds to investments that align with your risk tolerance and financial goals. Educate yourself on how to leverage debt effectively and explore tax-efficient investment options. Diversify your portfolio to maintain liquidity while seeking better returns than a traditional savings account could offer. The bottom line is this. The rich don't save money in the bank because they understand the limitations and opportunities that exist beyond traditional savings. By adopting a similar mindset and strategy, you can start building wealth more effectively. If you found this video helpful, don't forget to like, subscribe, and hit the bell icon for more strategies on building wealth and achieving financial freedom.